Thanks, everyone. I think we have starting the second day, and I hope all of you can hear me. And if I ever drop the mic below my mouth and you can't hear me, just wave gently, okay? We're still at the second day. And so a little bit about myself. I'm basically a technologist. I work a lot with big data, data science, and AI. I graduated with a master's degree in computer science from University of Manchester in UK, and did artificial intelligence at Stanford, and also have an MBA from the Haas Business School at the University of California in Berkeley, where I met my co-founder, and Sleekfin is our company. And we are focusing on certain new trends, new models that we want to bring into the real estate industry. But my talk today is about Proptech trends, not necessarily about our product. So let's get started. So what is the state of the industry today, right? Now, we have several things. One, we have directories where you go to Google and you search for things. You try to find lender agents, builder agents, or home listings, etc. It's basically no different from using the yellow pages. 20 years ago, you're doing that. Or you have lead generators where you put in your name and phone number and some basic details, and there's a bunch of people who are going to call you, and you repeat the same information over and over again. A lot of unwanted calls, and you're probably going to get calls like 2 years after you have actually refinanced or actually bought your home. Then you have digital brokers, right? And they're pretty powerful, they're very useful, and you put in all your information and they'll come up with a good rate for you. And it's going to be the best they can offer. And if you are in the market for real estate financing, then that's great. And finally, you have the banks, and I'm sure you all know how that works. And they do a lot of research on what kind of offers they can give you in terms of rates and mortgages, and you go with that. So that's the state of the industry. And I know that there are some better players, there are some players that are very traditional, but the question that you have to ask yourself is this really different from looking up the yellow pages and calling people? And I'll let you answer that question for yourself. We have an opinion on that. I think it is really not that different. You're just doing it on your computer. So, what are the new trends that we're seeing? There are many of them, and I picked these 6 today. The first is to anonymity and privacy. What is happening, at least from what we see and from my own personal experience, I've refinanced several homes and I've bought many homes, many commercial properties. My information is out there, and I get like really irrelevant calls and irrelevant marketing promotions, etc., when I'm not really in the market for buying anything or refinancing. So it's really annoying that my information has been given out to a lot of people without my knowledge, and I don't know how they're going to use it. So one of the things that we started out is like, why do you need to give all this private information about yourself and broadcast it on the internet? And it's going to stay there forever, by the way. I used to work at Google. I know we don't delete anything. It's all there. Trust me. It's going to come back. The second topic I want to talk about is auction-based financing, which is a question that we asked ourselves is, why are you going and just taking the rates that people offer you, right? And then you pick maybe 3 or 4 lenders and you negotiate with them on the closing costs or some other benefits they provide for you, and then you close your home or close your financing. Why does it have to be that way? Why can't it be a more bidding process where you, as the person getting the financing, you're actually going to pay interest for many years. You're giving them money. So why wouldn't you actually let them compete for that business? Because it's basically a business proposition. And all of this is supported by AI-driven marketing, which is my area of expertise, and I'll talk a little bit about it. Not technically, of course, and if one of you are interested, just come and catch me outside. I'll be happy to talk more what the models look like and stuff. 3D tours and live video, I think Giovanna is not here, but she talked a lot about it, so I'm going to skip that slide a little bit in the interest of time. And then I want to talk about the thing that is really passionately interesting to our company and thing, which is tokenization of real estate, which is also an important aspect that we look at, and smart contracts and how we can use that. So that's the plan. So why now? You can ask, why are we doing all this? Our target focus is the mobile platform, and a lot of people have smartphones. It's very powerful, and there are many things like augmented reality and et cetera that really are designed for your smartphone. And we think that it's a powerful platform where new kind of offerings and products can go on it, so we need to design for that. It's also economics. The digital features allow wider search for properties and products and loan offerings, et cetera, because you can go really wide. And technology. See, the important thing is previously loan actuaries, et cetera, and closing documents you sign on paper, which is actually a very good thing, and the government registers your document and they can do title searches, they know exactly what you did. But now we also have blockchains, and you can pretty much do the same promises and fulfillment of promises and record them and check them with integrity and make sure that no one tampers with it digitally. So these are three of the main reasons why these new technologies are coming into play. So let's talk about anonymity and privacy. See, most online sites ask for your name and phone number, and then they broadcast it out to many agents and third parties. You have no control over it. We talked about that. And then you get a lot of phone calls, you repeat all your information, et cetera, and you're negotiating one-on-one. So now why do you need to do that? See, if you really think about it, the seller or lender, to make you an offer, really need to know your profile. They don't need to know your contact number or your phone or et cetera. How much are you worth? How much liability do you have? And what are you willing to pay? And what is the collateral? Knowing that, they should be able to make you a good offer. And that's the premise that we are starting with. Of course, once you select the offer, then you go work with them. You give them all the information that you need. You go through their process, sign documents, register everything. That doesn't change. We're talking about the process before that. And so, this is what we call auction-based financing. It's like any other business proposition. You're the borrower. You're going to be giving them money for the next 15 years, 20 years. And they need to earn your business. So what do they really need to know about you? Is they need to know what is the collateral value, the property that you're buying. They need to know what your credit score is, what your net worth is, assets, liability, and then your income debt ratio, loan equity ratio, and liquidity, savings, et cetera. With this information, they know all they need to know about you, and they should be able to make a bid saying, hey, I'm going to give you 3.75%, 15-year loan with closing costs is this much, no points, 0.5 points, whatever. And they can make you different bids, different offers. And we feel that this is a more electronic way of doing it, like how you would buy on eBay. And we want to bring that model to the real estate financing industry. And so this is one of the new trends we are seeing, and we believe that this is going to really take off. So this thing actually needs to be surrounded with AI-driven marketing. And Some of the things we do, of course, it's big data supports all this. We collect a lot of information from third-party providers and actuaries, et cetera. I'm from the US. The US government provides a lot of data about real estate transactions, which they collect legally. So the primary thing is reasoning. We want to have a win-win situation for both the builders, the sellers, the lenders, and the borrowers. See, the lenders have to get their best rate that they can offer, and the more business, and the borrower has to get the best financing possible. The AI reasoning makes it possible for us, increasing in productivity and performance. Like, I have a target of $12 million this month, so how do you meet it? And our AI algorithms can say, hey, you really need to bid for these loans at these rates, and maybe you can give some advantage on the closing costs or reduce the rates for these guys and not these guys. And we know that some of these people, based on their credit history, they don't keep the loan for more than 3 years, 4 years, so you're not going to get much out of it. So it's okay, quote them a higher rate. They want, they can take it. Timing, and I think most of you know about this. You need to know when to refinance when the date drops. And it's also important to know how long you're going to keep the home, et cetera. And based on that, you decide how much you're willing to pay to get new financing. And we learn from all of this. And we do the matching where we say, what's the best financial offering that you should take? So these are all things that AI can provide. And we develop a lot of these algorithms, but there's also other companies that do a lot of it. Another aspect of AI-driven marketing, which we feel is very important, is to understand what the user is actually looking for and his preferences. It is not going to be possible to ask them questions and collect the responses and decide what they're going to do. Instead, we need to really understand how they are navigating through the sites, what they're looking for, et cetera. One of the big things is what kind of neighborhood information they're looking for. Like in our platform, we characterize things like rail stations, education, temples, shopping, et cetera. And then we track whether they're clicking on something or how much time they're spending on it, how much time they're spending on viewing pictures, which images they're focused on. Maybe people are looking at the outside a lot, so they're interested in more of the aesthetic look from outside or landscaping. So we can collect that information and tailor the search results and et cetera more closely to what they're looking for. It's not going to be accurate, but we know more about the user than probably they know about themselves. So we know what they're liking. And we think this is going to be driven by AI. And we have to do this with the buyer's permission. Of course, we ask them, we tell them, say, we are doing this, so is that okay? And we do that. 3D tours and live video you really saw yesterday. And I think most of us are familiar with this. And the thing I want to add about this is there's a lot of live video tours now where you call your agent, they actually walk through the house with you, and you can ask questions, and you're able to get a feel for you're able to see more properties, you're able to make decisions on what neighborhoods you want to really concentrate on, and target and focus on this. So then I want to talk about blockchains and integrity. So what is really this aspect of it? It all starts with what we call a non-fungible token, and I think you've all heard about it. A non-fungible token is what it means. It cannot be changed. So it's like this bottle of water that's sitting in front of you. It's physically that bottle of water. Although you have like 50 bottles here, that one bottle is very unique. It cannot be changed. It's been manufactured, and that's it. So we have the digital equivalent of that, which is called the non-fungible token. So once it's created, it's very unique. Nobody can change it. There's not going to be a second copy of it. Nobody can duplicate it, forge it, etc. It's there on the blockchain, it doesn't go away. See, once you have that, that is your digital record. If that NFT represents your title to your home, then you now have your title digitally on the blockchain. Now, what can you do with it? You might have co-owners or share owners, which happens a lot when you have larger properties that you inherited from somebody. You know, I have 3 brothers, they all own like 1/3 of each. But if you look at the actual registration and title, that does not reflect it. It might say there are 3 owners for a property, but nowhere it says that this person owns 1/3 or 1/3 or 1/3. Never says that. Now, there might be a separate agreement that somebody wrote, attorney, and they may have registered that with the government or to register, and that might tell them what the details are. But they're in 2 different places. But here what we can do is, because this asset is out there, we can now record the ownership, and we know exactly who owns what. And we feel that this is important because it now changes a lot of equations for us, because now you can create products around this. And the integrity of this can be verified. We know who the owner is, who the lender is, etc. And even if the person who created the NFT goes away, like for example, let's say we are the administrator and Sleekfin goes away, but that NFT still stays in the blockchain and people can verify it, that doesn't go away. Now, what do we do with this? Coupled with the blockchain is what we call a smart contract. A smart contract is exactly what it says it is. There are conditions on the contract. There are actions that the conditions say what it is. Like, for example, deliver a good faith estimate upon earnest money deposit is an action that happens with a condition. Make payments when the conditions are met. For example, credit seller 30% when the foundation is laid. So basically it states what happens when the conditions are not met also. Refund the money to the buyer. This is no different from what you actually you write on a physical contract and sign. It's there, but these actions can be taken automatically. Now, this all sounds really great, but the real thing is, how can you actually productize it, and what will actually work and what will not work? In our opinion, we feel that there are certain types of conditions that will work, and they have to be very quantifiable. There can be very unambiguous actions that we take on it, and there has to be a time bound for it. You can't have a condition like, okay, I want good landscaping. I mean, who defines what is good? Those kind of conditions, you can't use it here. So that's the pros and cons. You really use the smart contracts to, for example, control the offer process for a home, which you can do digitally. So now it can be streamlined, where you look at the property, you like it, you make the offer, and then you do the negotiation online. And then once both the seller and the buyer agrees, then it gets converted into a smart contract, and then we can do the escrow process digitally. And there are companies that are doing that. Unfortunately, in India, the escrow process is not very straightforward. And we are also trying to address that market space. So then I want to talk about why we would create a digital asset for it. This is where you can actually build a lot of different financial products and offerings for your consumer. One of the things I'll talk about is bridging loans, which is you want to buy a new home, but you have to sell your old home before you can buy it, and you don't have enough credit. Or you need a co-owner or a co-buyer. Now, if you were to have your home as a digital asset, an administrator such as us We can convert this to an NFT, and we will issue what we call a token. It's tokenized. And then at that point, it's actually a security, just like any stock. And people can either buy it or sell it or trade it through the administrator. And two ways we see it. One, you can sell a fractional ownership of your home, which would be the ultimate thing. I don't think many people want to do that. More people would want to say, hey, I have a $100,000 home, and I now want to borrow $15,000 on it, like a home equity line of credit. Normally, you would go to a bank to do that. But here, in the digital world, you can actually have that money borrowed from somebody who's willing to lend you that. And 15% of your asset is staked to them. And staking is a blockchain concept where it's like they own it, you can't sell it. Now, at some point, you can pay back the loan and you get the thing back. Where we make the money, et cetera, is that there is a fee, right, for that transaction. And where the investor makes the money is that for me to, like, I'm the investor, you're the builder, you're the consumer. For you to get that $15,000 loan, I say I want 10% for 3 months. So you pay me that 10% first, and I give you the money, and in 3 months, you pay me back. That's the idea. Now, the important thing is what happens if you don't pay me back, right? Now, I do have a fractional ownership of that house. We, as the administrator, we put a lien on the title, which means that you can't just go sell your house and it goes away. So we become like any other bank that's putting a contract on it. So eventually, when you sell the house, you will settle it through the closing process. Now, we can't do it if you have a $100,000 house. You can't like take a loan for $75,000, right? It's too much of a risk. So there's a little bit of a limit to that, which we are still trying to work out what that thresholds are. So we really feel that these are new trends that are coming in, and they all revolve around AI, blockchains, and smart contracts. Now, the important thing about all of this is that there has to be proper productization, just like any other thing that you would look at. And one of the things we are doing is working with insurance companies to say, hey, we're actually guaranteeing, facilitating this loan. Now, what happens when it defaults, right? Can we get mortgage insurance on that, just like you would get PMI, right? And there are insurance companies that are very interested in this concept because there's actually a physical asset that backs up the security, and they can insure that. So I'm sure that people who avail of this facility, and not all of them are going to default, so it just works like any other insurance process. So once it's insured, the investor is guaranteed to get that money back up to a certain threshold, and this becomes a really open market, and it's a place for people to make money. If you have cash that's sitting forward, then you can go maybe get 10% by lending it for 3 months to somebody. You become the bank. Now, this is not possible today. You can go to your friend and give them $10,000 and say, hey, give it back to me in 3 months with interest rate. Hope is a very good friend, so you can do that. Otherwise, they're going to send a couple of guys with shotguns. No, that's not our area of expertise. So I can't tell you anything about that. But it's similar to that, right? And it opens up a new realm of possibilities for investors, just like you would buy and sell stock, right? The only difference is stocks, when you lose money, you lose money. There's no insurance. There is really no insurance for stock trade, right? But here you can have a certain degree of insurance for a certain percentage of that. And it's a more secure way of doing it. and there has to be a building a product around it, and that's the business we are in. So I will stop here and open up the floor for questions, and feel free to ask me. If it is technical, then let's take it offline. I can explain to you the algorithms and stuff. But if you want questions on any of the things that I talked about, please feel free.
Firstly, thank you. It was a really interesting presentation. In the UK, we're seeing, particularly as a result of COVID, what we call location agnosticism. So people are moving to areas that they wouldn't have considered before because they don't need to be linked to a particular work location. One of the things we're interested in, it's a bit conceptual, is could AI be used to spot those, somebody in Edinburgh is maybe thinking, well, where do I move to next? I move to London or Bristol or Birmingham or maybe even abroad. How AI could be used to spot things that they're interested in and go, actually, there's a development in Birmingham that has the amenities. I guess what I'm doing is echoing something you've said in your presentation, but this theme of location agnosticism is something we're seeing more of, certainly in the UK.
Yes, I think to summarize your question, can we try to predict where the person is going to move to or what area is interested in? Definitely can be done. One thing to remember about AI is it's not going to give you a precise answer. We work with probabilities. I can tell you 99% sure that there's a tree there, but you might be the 1%. I'm sorry, call your insurance. So it's a certain percentage of accuracy we can say that maybe they're interested in moving, but they may be looking for a friend, etc. But that's all possible. And people are doing it, right? If you go to Google, then they give you a travel map history, like where you all visited, and they can predict where you're going to go next in 3 months. And that's all being done. Yeah. It's very similar to shopping, right? And if you have Alexa, I have Alexa at home, it reminds me, it says, hey, you need to buy napkins or whatever. So they know what they can predict what you do. And they probably can do it with real estate too. We're not in that space yet. We are more focusing on neighborhoods in the cities themselves, like where you think you'll go in Birmingham, for example. Yeah.
What I understand is probably loans will get into a digital platform.
Can you bring the mic?
Can you hear me? The loans will be getting into digital platform system. So can we expect something like a demat accounts which we have, like equity, and selling and purchase of shares? So can I see a future where we'll be selling and purchasing of shares of our properties with some governing bodies into a platform like you have a demat account and where you can do that in future, which may be much faster?
If I understand you right, would it be like a security that people can buy and sell, right?
Yeah. A dedicated platform for doing all this, maybe. Today, which we don't have.
Right. That is where we're headed. Like when you look at this security token, it actually becomes an asset. Now, that asset can appreciate in price or depreciate in price. Now, there has to be a condition which increases it or decreases it, right? So the amount of money that is lent actually earns interest and fees. So the more you do that and the more it is stable, the amount you're willing to pay for that security is going to go up. So it's like a stock price going up. And if we do a bad job, it's going to go down. So we believe that it'll become a tradable security, and then you'll trade it like anything else. And it might be that uh, you want to sell it to somebody else who's willing to pay a higher price to own that because it's paying the dividend from whatever the profits were from the financial operations. It's just like a bank, right? The bank is more successful, the stock price goes up. Is not successful, stock price goes down. We believe that this token in security has to work similarly. It is backed by a physical asset, which is the homes that we have done. Well, hopefully that's not the security alert for this token, but it can happen. And that's a good question because what happens if it goes default, right? Everything goes bankrupt. Yes, you're going to lose the money, and same risk that you would take with the stock. Hope I answered your question. Any other questions? All right, thank you so much. Appreciate that.